The T-line is an extremely relevant factor when it comes to analyzing what's happening in investor sentiment. Very simple trading rule when applied to candlestick analysis. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. That occurred on Friday with the market selling off on the close. The Dow and the NASDAQ closed below the T-line. It has two very strong rationales for a change of investor sentiment. First of all, we've discovered through the years that the T-line is a very strong indicator. It acts like a natural support and resistance level of human nature. So if you see a candlestick sell signal and a close below the T-line, that provides very strong probabilities that you're now in a downtrend until you see a buy signal and a close back up above the T-line. The same scenario occurred in the NASDAQ, kind of a shooting star. They couldn't break up through this level and then had a close below the T-line. So not only do you have the probabilities that the bears are in control, but you can see visually that the strength of the uptrend has now dissipated and now it's starting to head the other direction. Knowing that allows the candlestick investor to make much quicker assessments of which way their portfolio should be positioned. Our recommendation to buy puts or go short on Wayfair was based upon the fact that we saw indecisive trading. Spinning top, hanging man, bearish engulfing signal, and then a close below the T-line. Friday, when it gapped down, it told you were staying below the T-line as well as you were not being supported at the 50-day moving average. That indecisive trading day on Friday put us in a position where if we saw it start trading lower today, that you had a bearish doji sandwich confirming the selling up here. And what do we expect from a bearish doji sandwich? More downside. So we could buy short stock or buy different put spreads anticipating the price heading into this level. Seeing that the market in general was getting a little bit toppy over the past couple weeks allowed us to start thinking, come out of long positions and start going short. Notice our left-right combo, a bearish or a doji followed by a bearish engulfing signal. And what was the strength of the sellers? The fact that they gapped it down from that level. Anytime you see a strong reversal signal followed by a gap, that tells you there's probably going to be a lot more force to the downside. This just a simple explanation of what's happening on the chart as far as human nature is there was a reversal signal telling you the sellers might be taking control, and the gap down told you the sellers were definitely in control. There was going to be more downside. The same analysis could be applied to Macy's, where it had kicker type signal closing below the T-line with the anticipation now that the price move is heading back to test the lows and possibly giving you a wave 1, wave 2, wave 3 steady downtrend. This is not rocket science. This is using simple indicators to tell you what's happening in investor sentiment and then using the signals to tell you which way the price is actually confirming. The T-line also acts as an indicator to tell you if you're in an uptrend, you can stay in that uptrend even if the market's turning against you as long as you stay above the T-line. Our recommendation a while back on HOME, H-O-M-E, was based upon this kicker or this belt hold type signal that told you they took out the sellers. There was more upside. And how long do you hang on to this position? You stay long as you don't see a sell signal and a close below the T-line. You don't have to be a sophisticated analyst. All you have to do is learn what the signals tell you as far as human nature and investor sentiment. The Japanese rice traders provide us a platform that tells us which way prices are moving based upon the bullish or bearish signals. if you always remember one simple statement that that allows you to take advantage of candlestick signals. Candlestick signals are basically the graphic depiction of what's going on in human nature. And prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. That'll be it. We'll see you in the chat room.